Welcome, beautiful people. Thank you for joining and liking and sharing and doing all those magnificent things. It is truly puppy licks to my face when you do such kind and generous things. Yes, indeed, we're going to talk to you about the great euro collapse. The euro collapse is not the only one we think that are going to lose ground. It's going to be as much about dollar strength, actually. Dollar strength, isolated dollar strength, largely as a currency. There's going to be problems for the FX emergings. We're going to serialize the big YouTube we did where we threw 6 ideas, and we're going to discuss the euro, USD, and the euro Swiss franc today. That's right. So there's going to be a focus on that. Remember, the dollar index includes a lot of the euro and also the Swiss franc to a degree, the pound, a little teensy weensy bits of the Japanese yen. So there's fragments of those things, but the euro is the biggest part. What tends to happen, and you need to think about the euro USD, very rarely is there an event that I can recall in FX that they both advance immensely. They are like a seesaw. There is a fulcrum and there is a plank, and what's good for one is usually bad for the other. Sometimes some country does a good and they go up and it pushes the other one down. Sometimes that one country does a bad and they get pushed down and it pushes the other one up. But they are in essence a little bit counter-cyclical. In other words, what's good for one is not so good for the other. You get that? It's kind of simple. It's kind of like the way we view anti-fiats, Bitcoin, gold, silver, and the dollar, a weak dollar, is good for the notion of the anti-fiats doing well as well. So dollar is the king. It is the king of the fiats realm, and that's how you should view it. In actual fact, people always seem to have got this concept that the system falls down with the collapse of the dollar. The system can fall down, and this is a point I've understood, and that Brent Johnson has made him of the dollar milkshake, is that the system can fall down with the dollar being too strong. And that can actually lead to everything else becoming too weak relative to it. Remember, it's not just about one country. If you want to blow the whole thing up, it's much better to blow up the rest of the world and to get politicians everywhere going, it's wrong, it's wrong, it's wrong. The huge advantage of being the global nation, oil shouldn't be priced in this shouldn't be priced in this, da 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 da. And I can tell you, in terms of what we do for you on Reset Sniper, it's not what you make, it's what you keep. That in banks in Georgia, banks in Panama, banks everywhere all want to hold on to your little dollar deposits. They love it when you're depositing and they hate it when you're withdrawing, and they make it really a big headache for you. So all of these second tier clever reset jurisdictions that you may want to have, by the way, to protect yourself from the great reset. By the way, you should have structures. It's not once you've already made an absolute bomb on Bitcoin that you should start thinking about it, guys. You have to start thinking about what you're going to do when you're wealthy and how much you're going to keep. Sometimes before you're even that kind of wealthy, it makes sense. But at the same time, if you just put in $100 in your FX account and you're buying crypto at $10 a month, you maybe don't have to worry too much yet. But it'll come, it'll come. Anything larger than that, you want to start thinking about it, because they are going to come with tax extraction. Yes, saw this oily little character who is the executive director of policy affairs for the Tony Blair Institute. Much higher taxes are coming and you're going to want them, he says. No, I don't want them. I don't know who you're speaking for, because they're going to spin some yarn in his article. You can go watch my Twitter feed to see what these controlled cartel of inner sanctum psychopathic morons do in their bid to extract endlessly from you. But I can tell you, I disagree immediately. The tax saves nothing. By the way, your inflation that the Americans have faced a great deal with, 6 trillion here and the Biden 3.5 trillion bill going through, and all of these trillions that they've fed all sorts of slush funds, political institutions for running scammy elections and buying people off, all of these things, pumping up equities, buying up the whole bioterrorism group, and doing, just generally investing in Vanguard, BlackRock, and all the other blacks that are all essentially buying up America and all the property in America. Yep. That kind of stimulus. Well, it's kind of inflationary, and guess who makes all the money? Well, all the people that are now buying all the assets that are going to hold value and get a gear up. And guess who gets disproportionately put down? All those people that have very little assets. The biggest asset is their car, and they've got a rental check to meet every month, and they're working extra time and 2 jobs. Guess what? They become UBI recipients. That's where you've been taken. Inflation is the great tax, and it is being levied on you in unparalleled levels. Unparalleled levels. To create 25% of the all dollars in existence in a single year is hugely inflationary. 25%. It means you've been diluted. And guess what? The dollar's going to have a turn to be strong now, and there will be similar needs to a similar degree, although it's already happening to some degree. But the spotlight's going to switch because the Fed can't be made to look so stupid. They've looked ever so stupid with their transitory, just passing through a teensy bit of inflation, really, like everybody else, bullshit, calling bullshit on them. And guess what happens? It looks like bullshit. Yep, it smells like bullshit. It came out of a bull's backside, and therefore it is probably bullshit. And that's kind of how it's turned out. Yep, so with that all understood, it's somebody else's turn to churn out bullshit. So now we're going to get a European bull to do that. And it's also going to affect Britain to a larger degree. So let's take you into the charts, to the charts. I think it's that way. And we will go and have a look. And I will be showing you right here the EURUSD. In fact, we got it on the weekly. Let's go right up to an even bigger time frame macro as far back as this little fellow goes, which is not very impressive. 2003. That's no good at all. Let's try another one. He's even worse. How can you be worse? These guys should spend a bit more money on their history. The history of the euro. There was even proxies for the euro well before the euro, of course, was launched as a currency. Many people don't realize that. It was launched in the millennium. But here you go. So from 94, this is in essence what we've had. And actually, most people don't realize that for now, we've actually had one of the most stable periods for the Euro USD. And everybody thinks, well, therefore, it's going to stay that way. And, people forget that volatility washes in and washes out, but it always returns. And after a sustained period of relative stability, because there were some reasonable moves, you're going to get some action again. So let's do some drawing. From 94, you can see if we were doing what we call the tops and tailing, I'll take a straight line on that. We're going to talk about when it was at heap for its history, significant overvaluation. I'm pretty sure we've got a log scale on here. Let me just check. Log scale, is it log scale? It sure is. I might go regular scale just for this big example, and we'll go back to log afterwards. I want to have the round numbers on the scaling. So let's do this. TG Pink for the top. Yes, the transgender is on top. Oop, bop, bop. Wiggling is whatever is what it is. I have no idea. Interest to find out either. So 1.5 would be the probably the extremity range, for which you don't get too much price action above. So I want literally 1% or 2% of price action above that. I want 98, 99% below as part of the tops and tailing game. And I'm going to point out to you teensy weensy little boy Pippi on the monthly chart, upside HVF, that macro overperformed over there at the lows of 2001 when the dollar went super weak. During that period of having a bit of a recession after the dot-com boom. Everything was internet, everything. So if I draw with that same blue line, I would probably go down to around the 90. And that way we have two very small pieces of price behavior that existed outside of a little bit of iceberg above the waterline there, and that's it. And then similarly over here, that's it. So overall, for the current history that we have, bear in mind the Deutschmark and the Greek drachma, all of these things used to exist in an entire basket, and we should have been able to do a sort of mimic proxy of what the euro would have been many years from the post-war era. So this is not the most conclusive history period, but it's what we've got from this chart for now, and it's from 94. That is starting to be quite a long time ago now as we head into 21. So it's 27 years of history. So it's not entirely bad, but it's far from being the grand macro biggest ever proper deep dive of all European nations versus the dollar. But let's go with it anyway. So 90 plus 1.5 is 0.6 differential. We divide it by 2, that's 3, and we add it on to 90, and we get, you guessed it, 120 is your mid-mark. And that should feel like a fairly regular number around which you have spent some time on either side. Roughly 50% above and 50% below. And I would think that that's pretty much a good wrap for 120 as your midpoint. And the point I was making about volatility is actually early doors, this was kind of schizo. It was pretty prone to quite big moves. So you had the whole euro crisis, you had the dollar.com boom, which actually the dollar weakened into. This is, no, my apologies, the dollar strengthened into it. Sorry about that. In fact, you have a couple of key levels that you want to include as well, like, wait for it, I've got to put this level on as well. Can't forget this. Parity. Parity and 1.5 we already have. Parity is going to be a key level. It's a psychological level. It's a point of embarrassment for Europe, basically. Anyway, so the dot-com boom, everybody was moving into Cisco, Amazon the first time round before it had its vomit back down and took back 96% of what it gained, and then there's not been a non-stop tear away. All of that was dollar strength. Then we had the period in the dollar recession post-dot-com when everybody was flooding out. Everybody was hired and could bring their pets to work and could do all sorts of free things. They couldn't get the staff. In that era, it was all love and light. Everybody could go work in America. It was just all too awesome. And it was just stock options and people were leaving for 20% increases in salaries. That was all the part of the big great fluff of the dot-com period. Post the recession, dollar really needed to fix itself, and it went on a weakness against the euro. It went on a weakness against the euro where in actual fact you hit a high of 160. That was disproportionate. And during this period, by the way, we also inflated the great housing boom, which America facilitated and was also churning out, as you know, collateralized debt obligations made up of ninja loans that were largely worthless and contaminated like a virus the rest of the European banking system, who kind of copied them to a small degree, but certainly not to the same level of fraud. And then we had, during that period, the euro was getting stronger, then bang, the whole Lehman's crisis that came with that feel-good mass affluent era. Everybody to be rich. You could just release equity on your homes all the time and buy new cars. It was a fabulous period. And it was all the big debt merry-go-round. It was Greenspan and then his follow-ons that came. That was the great proliferation and low liquidity. It was all about the Goldilocks economy. There is no inflation. We can create as much money as we like. There is no inflation. Of course, they were building up debt and asset bubbles, which is inflation, but it just isn't inflation in terms of your price of milk. It's inflation of asset classes, which then subsequently led to the whole crash bang of the subprime crisis. So subprime, you pull back, you did all of this. You had a nasty sell-off. We'll stay with the red color. You had a nasty sell-off there for the euro. It was affected a lot of the Swiss banks. And then we had the Draghi moment where he said, I'll do whatever it takes. And I remember that moment very specifically because the euro traded 1.4 literally for a nanosecond, if I remember it right, or it wanted to. It came within a hair's breadth. And then they killed the euro. They killed it with proliferation, they killed it with buying, and they were in deep trouble. And that saw to the great sell-off over here. Whoops, that's a circle. Let's go back. So we had a strong and violent sell-off, and that was effectively deemed euro no longer super strong. Now, I will remind you of some of these things which happened with the euro Swiss franc going on with this. And the Draghi moment of do whatever it takes was causing an absolute nightmare for the Swiss National Bank. That was trying to hold the euro up and trying to buy euros and sell their Swiss franc from over appreciating. And once Draghi decided there will be no stepping back in killing the euro, the Swiss had to walk because the bigger central bank was going to print like no before. And the Swiss had to answer to their citizens why they were doing not-for-profit trading in the forex markets and destroying real value and money. And as a result, they walked, and then we had the whole drama. So what I've been saying to you about relative low volatility is this degree of price action that we see here. Since those lows, what you've actually had is that. And people have stopped talking about the euro crisis. People have stopped talking even about Deutsche Bank. The banks have been a little bit reflated. Some of the people have noticed. They're completely broken. They're completely zombies. Nothing has changed. We were all over it when it was interesting and new, but a lot of people just stopped talking about it. We've stopped talking about it. The banks are broken. They are still broken. They never took remedial action, and that is still a little gremlin that can be, you just have to open the box and all the rot is still there. It's festering, getting old and stinking up the place like it always was. And in fact, add time and further malfeasance, and actually it's probably worse than it's ever been. So what are we saying? We're saying the euro to sell off again. The euro to sell off. It is roughly at its midpoint of fair value. And we'll drop into another time frame. I'll take a little picture for that so that we can share it for you on Twitter. It's such a Picasso masterpiece of art and drawing. But that will help with establishing the macro view when I take you into something a little shorter time frame, but still the macro trade. And that is that we're in a head and shoulders on the Euro USD. That's right. A head and shoulders, in our opinion, and that we are going to face dollar strength. And as I keep saying, people expect the death of dollar or the death of the financial system to be on dollar weakness. And I say to you, against what? Against gold? Sure. Against Bitcoin? Sure. Against silver? Sure. Fiat? Fiat to fiat? Comparing apples to apples? Which? They're all lepers in the leper colony. How do you choose the most beautiful Mrs. Leper? Let's have a beauty contest for all our lepers on the stage. And you can tell me which one is the prettiest. Which scab do you like more? Oh dear, oh dear. No, I'm afraid they have all drunk from the same mug. And they are all over-indebted, hyper-indebted. They have all inflated asset bubbles under, you thought they were independent. The internationalist cartel seems to have a very common meme through all your central banking pals. And guess what? It seems they all have the same sickness because they've all been following the same playbook, which seems like ring-a-ring-a rosies, a pocket full of posies. We all fall down together, you see. Now that was about influenza many years ago. So come make what of that you will. But let's go to the weekly chart and drill down into the trade. So as we start to get in a little closer, I'm going to go back to my predecessor draw and I'm going to show you what I think is happening. Let's go 3-day. 3-day chart. Every candle is a 3-day. I'm going to highlight where the previous high was as well. I'm going to point to you that you stepped for a nanosecond above the 125 line. Very psychological in this current realm post the big collapse. There was lots of interaction with it there and attempt to reclaim and then Spilla into that low. Now, this recent attempt only got you to 123.5. So the euro is not got the same strength it had over here. It is bulking at that. It got slammed really hard, came back down to the 117. That's our blue level there. And then a secondary rally, which is doubly exhausting Because you try again and you get knocked back all over again. And now you are hanging after a few minor bounces on that very key 117 level after giving a left shoulder, try get your sides right, and a right shoulder here, and a double head, complex heads. We cover this in great detail, by the way, to much further than I'm going to be able to do today in our recorded content around real practical head and shoulder trading. And we are not head and shoulder traders, but if we get an HVF and a combination of a right shoulder with fractals, structures, multi-time frame views, how we build up to an exceedingly high reward with limited risk trade. And this is the opportunity we're here to discuss today to try see if you can help make a little bit of money for yourself so that you can buy your way into our amazing community of friends. And this is the opportunity that we see. In other words, the euro will be weak. And this is a bit frustrating for gold bulls and silver bulls, and also even for Bitcoin bulls, is that they will have to swim upstream a bit in a strengthening dollar, because the traditional institution pension derivative money is a dollar settled environment. The biggest markets of debt markets, apart from the forex markets, which are bigger still, but debt markets, the people will hide in debt. So when people want to run out of hundreds of billions of exposure in the Eurozone, they will hide it in dollars in the debt market. They might even buy up a little bit of the stinky stoink market. And they could also buy real estate and other dollar-related exposure, depending on who they are and what they are. So let's have a look at this structure here a little bit more keenly. Now that you've seen its relative high is lower than that which was its predecessor, we'll go to the daily and see if we can get it all in. And what you have is a very heavy to the 117 piece of price behavior. So initially we had this big rising wedge for the dollar. In fact, it was the dollar that got killed in the pandemic. You know about that. It just started to go up and be really strong and then was smashed, and then they did all the printing. The dollar saved the world. The dollar. They printed it into, as I've already disclosed, obscene amounts. And that was the rising wedge that the Euro USD crawled up in gaining strength against the dollar. And I've shown that as a basing ascending grind line, which is going along the low. So remember, wedges can be broken right down into fractal elements thereof. Sometimes you don't get the capping ascending grind line in a neat line, but you might just get one part thereof. We break down to the atomic level, to the molecular level, real patterns, and we do not focus on moving average and other technical analysis dogma that has been there to sell indicators and false eye candy, and for technical analysts that are not real traders as market commentators to say we bounced off the moving average. Yes, that imaginary line that's made up of mathematics on lagging data. For some reason the market decided to bounce thereof. So we don't involve ourselves with that religious-based dogma, but we do definitely recognize patterns, and this was squeezing up, so you could see that you were getting buying coming up, up, and then you saw you had a little grindy, Mac grindy, another squeeze, and we often treat these as special when you get a fractal of a squeeze along the basing ascending grind. It can't get up anymore. It just can't get it up anymore. Poor old man. Time for some Viagra. Oh, don't mention Pfizer. Sorry, I didn't mean to do it. Anyway, so rising wedge, you broke, and this was the result. Down, down, down. Then you got the return move, which is essentially the second half of the head. So this is a double-headed head and shoulder. It can happen. We talk about complexities in the practical sense of trading head and shoulders, and that's quite a strong rally, but as I've already pointed out, it failed to make the new previous high. My apologies. It failed to make the previous high. Let's change shape, shall we? And he deleted them all. Never mind. So 117 is our magic level, and 117 is right where you're at. And if you think this is bottoming, you should expect very soon a very strong rally. So this is how we be wrong. This is how we be wrong. You should always ask, how do we be wrong? We can be wrong. And this could even happen and we still could be right, but just early. In other words, there's going to be some degree of dollar weakness and a little bit of a rally before. But we would need this to make a W bottom. And for us to get a 119 neckline and then have a little rest and then break and go all the way back up again. Do I think that's going to happen? No, I don't. I don't particularly. But if it starts going up strongly, my probability meter just starts turning like that. I just adjust to what the market tells me. But if it's hanging heavy and keeps coming back to tap on the 117, once, twice, 3 times a lady, then I start to believe it's a lady, or it's at least a TG Pink possible lady. So we've got to be aware of that. And this is not, for me, this price behavior coming into this, you bumped out of a falling wedge as well. So we do a lot of fractalization and analysis of the pattern. So you had a broadening slide over there, which you squared up out of. Bang. Then you came smashing back down onto the lid here and you grind. You create another falling wedge and you got that break. And guess what? It's not a return move. It's come right back to almost your lowest point. So it's just a very minor level of respect to a slap in the face. It's a very dead cat bounce. Like that. Little bit of a very weak boy effort. It's Little Pippi Stories, basically. And Little Pippi Stories says there's no real stud behind it. It's weak. It's a weakling. It's a weakling that needs lots of boosters and maybe some Viagra from Pfizer as well. So there you go. It's sitting on that 117. So what do we expect to have happen? Normally we like smaller shoulders. So this is our left. That's our double head complexity head and shoulder. And that would make our weak right shoulder. As I say, we might be a tad early. I like it when the one shoulder is lower on the weak side. And I would watch. So here's what you need to do. Because you're not in a community. Because you think you're going to save money and get free stuff like I'm giving you now on the internet. And you'll become rich anyway. Well, hopefully you'll get better. But you really grow when you are in a community of like-minded doing clear things. But I'm going to tell you what you need to do anyway. And you can have it for free. You need to watch what goes in here right now at that 117 letter. You need to watch on a lower time frame to see if there's any form of fractalized structure that could indicate that a break of a level was about to occur. Just like you had over here, squeezy, and break out. Just like you regularly get. The market loves you. It wants to give you gifts. You're just not paying attention. It wants to give you puppy licks, but you're not walking your dog, so you never see. You leave him in the utility room, all tied up. So go play with him, and then you'll get your licks. So if we drop on a lower time frame, what you would like to see is something pointing towards a structure that could be, you could enter on a much lower time frame with a much tighter risk, and you could trade for the reward, a substantial reward. We didn't mention the target. We'll have to go back up for that in the meantime. Now, I don't think it's going to happen right away. I put you early on notice to watch because you've started to make some element of rounded bottoming here. So that was a marginally lower low, and then this was the same low. So I actually think you first recover. You're going to think, he's wrong on the trade. No, it's going to recover first. And that can go days and weeks. It ain't wrong. We're telling you this is a monthly chart. This is something that breaks possibly this year. Not necessarily tomorrow or next week. But I would say there's not too much of this year left. I could see it happening. You could still have some form of an attempt at a reversal at the 17.5 and then fizzle back down. So you've got to watch. You're going to have to watch what's happening. Right now, doesn't specifically look ready, but I'd still have alerts down there. And I would, once it gets back above there, I would have my alerts at 117 as well. And you might want to watch for something that looks like that. Or you might get a rising wedge. And you look for something like that. There's actually only a certain number of ways that things go bad on you and fall. And you usually want something where there's a volatility constriction. In other words, great breaks. This will be a great break when it happens, and it'll move fast. And if you've missed it and you've got a FOMO in, you've missed it, bud. Sorry, you weren't paying attention. You didn't put in your alerts. You're not in a community. You miss it. And I'm 85% of you going to miss this, even with everything I'm saying to you. Because it won't come tomorrow. You want instant gratification. You haven't got the patience. But if you grow and you learn and you pay attention and you form community, you might have a chance of getting it. And in fact, you only have to get 1 or 2 really big trades a year accurate for extreme RRRs to have made your year worth your while. Do 3 or 4 and you're absolutely landed gentry. That's how it is. And that's what snipers do. They get headshots. They don't have to get headshots every day. They rarely do. But when they shoot, there's a higher probability of it happening. So watch on lower time frames is the tip. Top tip. And this has already shown some bottoming structure. So you're going to need something to happen to start setting up a little bit of a... And it's actually quite good if it goes up and it exhausts again and then comes hard down. That'll set up great possibilities for you. So you actually want it to go up now a little bit because it's kind of not clearly anything for the downside at this point. It's a little bit of a round and bottom. It's been coming down a fair amount on flags already. Broadening structure on a pole, flags. You know, it's been coming down for a while. So you actually need it to exhaust. So it's not tomorrow. It's not even next week maybe. But it will come. And you need to watch. So we want a little rally. We'd like it to go to 118. Be my guest. Pre-exhaust. Come back hard and heavy. And set up structure for me to the downside. That is the Euro USD. Let's go have a look at the Euro Swiss franc. But before I do that, let's have a look at your comments. What is the required funds to join the market sniper? Asks one man earnestly. And I say, book a call, because unfortunately, there's a couple of people every now and then that we say it's not suitable for. So we have a conversation with you to hear that you don't have unrealistic expectations. You understand, you own your own outcomes. You are not a man of complete straw and this is your last penny. And the price is the same for everybody. And you will get an offer after you understand exactly what you're buying and all that is entailed. So it will be demonstrated by very pleasant people that I have handpicked that are already HVF traders and now represent us. And you will go through that experience. You're under no obligation. There will be no pressure. And you will get an incentive to close in 3 days. And they will give you that same price that everybody gets if you make your decision inside that time frame. And that is all you probably need to know. But it's too cheap. It needs to go up. Especially in these proliferation fiat world. But we're not greedy either. We want you to win. And that's why the window's still open. What else? Ben says in 1 year he'll be with us. That's great, Ben. We look forward to welcoming you. Once, twice, 3 times a lady. Yes. That's how many operations it's going to take for them to cut all that meat away. In my case, anyway. I'm just kidding. I'm a little pippy, really. Complex tops. Francis, I think Euro USD will tank to 110 level. So we didn't cover the target on this. So let's do that. Let's cover the target and let's go up, 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 up. I need some more cold air. For some reason, it is just not blowing today, the fan. Must try harder, aircon. There we go. So, yes, targets I didn't cover. So just for this move, guys, just for this move involving the head and shoulder. Remember on head and shoulders, they can be quite cyclically. They can be an end of an entire cycle of appreciation for something. And what you actually had is the euro peak was actually beginning of the year. What you've had since is a smash out of the rising wedge down to a pre-curved cursory level, a return move that failed to take out the previous high. That means it's just a return move. A falling wedge, which should be bullish for a real snapback, actually gave you little pippy bounce and then heaviness on the neckline. That's the story of the euro for 2021 against the dollar. So the target can be overperformed too. And I will say to you that the possibility exists that overperformance, if we have the extremity of what I think might happen, it's possible. It's not as hard, obviously, as the target of 110, but it is possible. You could even see a test going for near the parities and even through the parity levels. Why? Because of the geometry we're getting on the euro Swiss franc, where it's around 105, and we see the possibility of the Swiss franc going right down, the euro Swiss franc having a spike moment through the 0.7. So we'll cover that chart next. But if you go spike moment through the 0.7 on the euro from 105, which we'll cover in a second when I get the euro Swiss franc chart up, that is going to be an epic move. Of course, the Swiss franc might be able to go up more relatively to the euro than the dollar. The dollar is a bigger beast. So let's cover the euro Swiss franc. Before I leave, though, let's go back to the dollar index. So the euro USD and the dollar index look like inverted opposites. So if I show you the dollar index on this chart, you should see it looks very much like the euro USD upside down. So let me just flip the chart upside down. Invert scale. That should look very much like your euro USD that I've just been showing you. So 110 on the euro will bring you to 97 from 93 on the dollar index. So that whole capitulation from 17 to 10 on the euro will bring you from 93.25 to 97.32 on the dollar index. So let's bring the scale back the right way around, and let's just take you back up to the monthly. Might have been this one where I'd done the big macro for you on the dollar, where I've actually suggested that the dollar index can go to 117. That's the one. So if you saw dollar index to 97 is going to be euro down to 110, where do you think the euro will be if the dollar index gets to 117? So if 93 take you up to 97 brings the euro from 117 to 110, well, just using a little bit of simplistic Chinese mathematics, if we picked up another 400 points on the dollar index, so we went from 93 to 97, if you went up by the same amount again, 4, it would take you to 101. You'd be down roughly another 700 points. So that would bring you to 103 on the euro USD. So it's quite safe to say that running 111 is going to deliver a parity break. If we run a parity break, if we run 111 on the dollar index, we will make a parity break on the euro USD. And that will be big news. And you're hearing it here first. I think it's deeply underpriced. It doesn't mean I'm telling you it's a 99.9% stonewall prediction, but I'm telling you it's deeply underpriced and could and should be potentially traded for with your overperformance leg of your arm once you've locked in at the 110 on the euro USD. So we're still talking euro USD. We'll come back to the euro Swiss franc. 111 here. Never mind if you were to actually have real disorderly markets and run a 120. That's serious problems. You're making new lows on the euro USD, even on that 94 chart, that chart from 1994. So back we go to the euro USD. We go back up to the monthly. That was not one with enough history. We take it, where was the one with the history? This one. You will run that low. You will run that low, which was 82. If we go to 120 on the dollar index, and you won't be far off lows if we go through the 111. So let's split our chart and put the two of them on there. This is big action. This is going to be headline grabbing stuff. This is not crypto markets doing insane stuff. This is big moves for the major macro fiat markets, good people. People don't realize what out there calls this these are. Dollar index up there. Euro USD would be down, right down these low levels. It would be through parity. Quite safe to say, through parity. Parity is up here. 111.75 will probably deliver a parity run. Very close to parity run. And 115 going to 120, you will run the previous lows in the 80s if you go to 120. It's big, big, big moves, big currency moves. And that will, what will happen is what I've already mentioned, is the social impacts of that will be anti-dollar. It will be framed politically by Europe, Britain, and every other country that this is destroying their economies, the dollar and the dollar cost. They will do that because all the commodities that are being inflated with supply chain bottlenecks, some of them accidentally on purpose, some of them created by events of March 2020 or 2020 it was. Yes, so those things all rising in price, of which we are currently long oil. It is serving me exceedingly well. We've recently pivoted long platinum, very close to what we believe its lows, but they will have a strong dollar to try mask the extent that commodity and other items are being priced. So your inflation is taxing you with your buying power. Your goods and services that you have to buy, your rents, you're driving your car to work, to the shopping center, all of those things are coming up. This is the great retail individual squeeze. If the late 90s, going from the dot-com boom into the dot-com bust straight into the property boom was the great retail mass affluence. If you didn't get rich there and you didn't keep building and getting real asset balance sheet strong, and you're now a millennial or you're someone who didn't make out like you should have in the good opportunities you were provided, let me just say, you're now in the big squeeze. If you're working a job where the max increase in wages is 3% if you've done a good job, 1% if you've done an okay job, or 1.5 and 0 if you're just holding your job and you're not got any promotion prospects, let me just say, you're on for a squeeze. They're just killing you on all your costs. And they're all going to be getting up higher. Electricity and energies are going to be the biggest that are coming at you. They're priced in dollars. So to hide that fact and effect on you as a European, a Chinaman, a Japanese, a Korean, an Australian, a Canadian, or a UK citizen, to hide that fact, some of that growth will be in the increase of the dollar against your currency. So your currency will be losing ground, and then that will attack your local politicians. Meanwhile, you're actually facing a period of dollar strength. So that might mean the Fed actually might walk towards doing some taper for the first time ever. As you know, we always call crap when they do that, but relatively, remember, any sign, if they just did a small amount of taper and a quarter point of interest rates and everyone else is doing nothing, in the land of the blind, the one-eyed man is still king, if you can understand what I'm saying. So anybody who's just not going in the same direction, even if it's by a micron, suddenly gets the flow of the money. And that happens to be the currency for which everything is priced on, for which will now project inflation onto you. In all your energies, in all your commodities, in all your soft agris, this is the great flattening, the great leveling of the middle. You are all deemed bourgeois, held in contempt, must be crushed into UBI serfs. That is it. Go and look at the Bolshevik histories and the moderately successful farmers who then had lynch mobs sent and were plundered and turned into the kulaks, they were called, just because you were partly successful and had a family and you ran a farm and could feed your own and could sell a few extra items. They weren't even grand scale farmers, and They were set up, turned into a hated prospect, just like the people that do not believe in needlecraft are, and they had all of society turned on them. There's real messages in all of this. Anyway, Euro USD. So that is a little bit of the history of what could come with the dollar strength. You could, in fact, see real pain on Europe, and you're going to see a lot of discontent, I think, in places like Italy, generally, very first to mind, but you'll see the Spanish, Portugal, French, not shy to get the pitchforks out. So you're going to see a lot more of that. There's going to be way more people. You're going to see white European poor on the streets begging. That's my prediction. At the end of this inflation cycle, insufficiently supported by government, you are going to start to get accustomed to that view. White European beggars on the streets of Europe. That's it. And it's going to be inflationary driven. It's going to be job shakeout. It's a grim prediction. I hope to be wrong. I would love to be wrong. Let's talk about the Swiss franc. So I did do this in the previous one, but we're just handling in more detail each of the individual trades because it's too much. 6 trades in one vid plus an indice, that Shanghai index to the moon, with a major super spike to come. People will miss the details. So Euro, Swiss franc. If you are a European or a Brit, you're from Sweden, you're from Holland, you're from Denmark, you're from the UK, checking in with me. Yes, you need to get your GBP and your euros into Swiss francs. Even better still, I think, have some gold, silver, and some crypto as well. See the Crypto Sniper YouTube. Also join a community. Make sure you don't miss the trade. Links below as shared by my good support friend here. Go to the website. There will be comments below with someone with my face. He's a scammer. Ignore him. We never reply and send anywhere. You must always start from our website, and that's the only place to go. And that's themarketsniper.com. www.themarketsniper.com. So YouTube doesn't like to put people away who hurt people by stealing their money by pretending to be somebody else, which is a great shame. Anyway, so this structural trade, which we warned you had a big block put into it, but basically needed a big sell-off to find its low, if it had been allowed to run its course without the short-term artificial intervention of banks, would have probably run into a low here. It kind of got there anyway. It got its super spike there. It might not have gone as low if some people had not tried to create a false market. Might not have been as intense. And that's how you are right now with that shooting star. The Euro Swiss franc looks more ready for me than even the dollar. So it could break sooner. Remember, they won't all necessarily happen at the same time. But what you'll get is the Swiss franc starting to gain against the euro. That's very much a European continental issue. And then you're going to have the dollar gaining as well. So it's not doing as badly against the Swiss franc as the euro. It may gain a bit in parts, but more keeping their own, both being relatively strong. And the euro just has a disaster against the euro Swiss franc. I would say this one is probably my favorite trade. We've traded it twice on a macro time frame before. There and on this great break. There. Twice before successfully. And it's still the trade. It's still the trade. It's like that Turkish lira USD try that we were trading at 3s. We started at 3s and it went to 9s last time I checked. I can't remember. Just kept going up. In fact, 1.3 all the way up. It was actually quite close in the 2013. I'll have to check what it was there. Get my facts straight. But you just stayed with that theme because it's just falling apart nonsense. And this is pretty much where you are with the Euro Swiss franc. This technically, for me, is a massive continuation downside stab. And as we've said before, we suggest that you will at some point trade 6 all the 9s and possibly below that. In other words, the 7 will fall, which is huge given that you can have it at 1.08 today. 1.08 today, because the searchlight, the media, remember, they can highlight in mainstream media what they want. Dramas break out wherever they happen to put the searchlight on. When they don't want things to be put under the searchlight, guess what? Look at the stability you've almost had. You came back up to the 1.2, which was their originally hoped for peg. You kissed it. Not quite nailed that line. Like that. And essentially you've been in this range. Only you're hanging heavy. You're hanging heavy and you're grinding up. And you're selling off hard. And if we split our box, as we are prone to do, because we do a lot of splitting, you had a short period up there. This was the whole recovery bit, and now you're hanging heavy. Now, if you want to ask me which side of the box breaks, I'm right there. And in actual fact, our triggering event will be higher. You can get in earlier, before all the headlines start running. You know you're in a good trade where you're already in profit and the headlines haven't yet started running about it. It's still to get disorderly. That's when you're in a great trade. And this one is ready. It's getting ready. It's more ready than the dollar. It's not this second ready. I don't mean to, rah! But you need to watch it. You need to be able to watch it on smaller time frames. Little flurry up, took it 100% back down. That's a flag. Flag rally so far. And it's coming back down. This is a potential rainmaker trade. Don't forget you've got right from that wick here. I'm trimming the wick. And I think it might come sooner. It might come sooner than the dollar. It's a smaller currency, but relative to other currencies, a better quality one. It is, of course, where all the secret services and all the legacy old money of Germany, France, and Italy all gather. It's the old family money with the secrecy banking. It is essentially the square flag nation. Go research what that means. So all the aging big family money criminals are all in there. And they prefer their currency for their local little piece of mountain and clean water to be not useless. So it wouldn't surprise me. So this is your next big trade, and the target that we have for that, we put the lights on for you quickly for a bit, is just above. Was it this one? Euro Swiss franc? Have I removed all the lines? Let's get it here. There's our draw. Target is 70. 70.8. And as I say, you don't stop on the penny. You pass the penny. So your two biggest trades with the dollar strength. Don't forget the dollar strength is going to be extra pain for the euro. So you're going to have the Swiss franc going first and people getting nervous about the European situation. Watch what Lagarde says. Watch what... she's totally political and a lawyer. She's not a banker. And she's all about the reset and the whole game. So she's one of the criminals. She's actually is criminally implicated. She's been indicted and she was guilty. So she is a criminal. I'm allowed to say that. It's not even a tag or a slur. She's a criminal. But for whatever reason, she seems to have not got punished particularly well, and she's running the show. And I can say to you that she'll be coming into the news a lot in the not too distant future with this sell-off. And then they're going to face dollar strength as well. So terrible set of circumstances for the euro. First, it starts losing ground against the Swiss franc again. Germans, Italians, French families of old start moving their money out, selling euros, depositing in Swiss banks. The Swiss already ridiculously low interest rates, don't want to lower it any further. They've got a housing boom that's never stopped really. And you're going to have the European zone with all sorts of trouble in terms of their social unrest. Look at what's going on in France, all of this. So it's a perfect tinderbox. I'm surprised What shocks me is why am I the only guy talking about the re-emergence of this? Everyone gets so docile. They got such recency bias. You know, it's all about this, it's all about that, it's all about the pandemic and all of this. Whatever happened to all these legacy things? Can you not see that this is looking terrible? This looks fairly close. Admittedly, we're on a big chart now. It's a monthly chart. But any month now, within a month, inside of that month, it could even be this month, could be next month, it could be before Christmas, that this starts a journey that will get very disorderly. Parity will get the bells ringing, probably just before. But if you see that low run of 105, and if you're asking me, right now, the Swiss National Bank is an accumulator of euros, already more than it wants to be. Obviously there in 15, they weren't able to distribute them all out. And again at 105, they're keeping this thing about 105. This is classic, this flag. There's no follow through to any 105. Nobody wants it. They just don't want it through. This is clear case. You will mark these words as a prediction as I stand here today talking to you. You will come to know that the Swiss National Bank already, before this date, here the date of the 27th of 2021 of September month, they've already been making, to some degree, accumulations of euros, particularly in the first part of 2020 through to 2021. They are sitting on euros that they've been buying up, and they will be buying up at this 105 because they need to keep it psychologically. They don't want it to be getting close to the 1 parity. It's too psychological. So they buy us at 105. Guarantee that's where they've been accumulating, right here. And no follow through. The markets see there's a bit of bid support, so it gets a weak rally from your daily jobbers and all of that, until they realize that weak support, it's there for a while, but they can't become net accumulators. Just like they couldn't do it here, and they were already active there. And I've got the low time frame charts that prove obvious intervention over there. So the interventionists still have lessons to learn in the great Swiss franc debacle. And let me tell you something else. As I mentioned before, the wives account was trading FX to the short side. It gets out. The secret services are all there. All the dirty dogs are in there. The news gets out that they're having to accumulate euros again, and people start to lean. And everybody knows at some point the rug gets pulled and they walk. And then disorderly market, man pippies off the roof. After 10 liters of beer, he pippies off the roof. And boy, is that some shower that you don't want to be caught on the wrong side of. Let's hear some questions. What saith the men of the ministry preaching at and praying on their hands and knees at the church of Sniper? They walked and bought FANG. Very good point. Very good point. I haven't mentioned that. Some of the biggest investors, Swiss National Bank, one of the biggest investors in Apple stock. Very good point. That was Second Horizon reminding me of that point. Subnub's going to be joining us soon. Welcome. We'll be looking forward to it. Riots in the streets of Holland, massive housing shortage, euro down, mega inflation, prices will skyrocket. Yes, Carthago, Delenda. Yes, I think you've nailed it. Natural gas up, oil up. This is a grand scale energies rocketing. Uranium for nuclear, oil, WTI and Brent, natural gas. Every single one of the energies are up and up very high. Oil, the biggest market, and it's almost, we'll do a little sidebar for you, seeing as you're having fun and bringing up some lots of very interesting points. Nice to have some wake people in the house. Well done. Give yourself a slap on the back. We'll have a quick fly by the natural gas contract. Oh, oh, that's how I wake up in the morning. A little big boy, stiff as a pencil. That's it. About ready to make new highs, 5.631. July, you could have had 1.5, now 5.6. Think about what that means for people running gas ovens, gas heating. 1.5 to 5.6. 1.5, 5.6. 4 times 1.5, 4. And 2, it's about 6. So you're about 3.5x on that. Brent, have a look at that little baby. It's actually already now taken out the previous high after its pullback. I think this one was on a reg scale like that. It's running. WTi hasn't yet taken out its high. Brent is the better oil mover at the moment so far. Oh yeah, and my uranium ETF, high. All of these levels. April 2020, that was the low. Then April, from about 2021 October, it's just started moving. That's where you are today for nuclear power. Nuclear power, oil UK, Brent, oil America, Western Texas Intermediate, and natural gas. Temporary, they tell you. Temporarily, they tell you. They are liars, not temporarily, but permanently. So, the only sad thing for me, which I've got to say hasn't yet worked, is that the oil-related stocks have not responded particularly well. My oil trade on the commodity, great. My PAA, it's looking pretty caca, but still holding the faith. But yeah, that was an interesting point, so well done for bringing it up. The man in Holland talking about how it goes. What about my UK friends? We'll do a small little segue there. I don't think it's great for the pound against either the Swiss franc or the dollar. The only thing I can't say for sure is whether the pound will be worse off than the euro or slightly better off. I haven't decided that. This is your chart, Euro GBP. I need to sit on it a while longer. So this was all the troubles of subprime. Of course, London disproportionately financial. So that was the subprime issue. That brought the euro immensely up. There was actually a structure there. Then it came back down as the European problems got big. And then as the 16 Brexit votes happened, there was your W bottom. And you would have made that target. That was your whole Brexit uncertainty pump. But you have come down quite hard. Looks like a bit of a rounding bottom. So we're waiting to see. We're waiting to see on that. That one could throw over and come down. But it could also have another rally. I'm not sure who's going to be the least bad out of those two. So no hard choice. Be in neither. My suggestion. Be in neither. Get yourself some francs, Swisses, or some dollars. Better still, Bitcoin, gold, and silver, and platinum. Use the links below. Pure gold. I just joined the stream. Good, welcome. What's the chart for? It could come, yes, so crypto, someone's mentioned crypto. So I also think crypto will extend through December. I think, we're still a little bit iffy. We could have another roll a little lower. The risk of that hasn't gone entirely. So I'm not strong right now. I'm waiting for a low at $35,000 at the head and shoulder target. I'm a big buyer. That's where I am on crypto. So you actually have an HVF setting up on Bitcoin. So any crypto guys here, but we're at a sort of looking for a low too, and we could go a little lower in searching for that, and it could be the head and shoulders low of 35. That doesn't mean it has to meet that target, but I'm sort of neutral right now. I'm waiting for it to come down a little more and to go in back strong. So I'm expecting a bit of softness. That kind of dovetails a little bit with the dollar showing a bit of firmness and initially it not working for crypto. But once things get disorderly for the crypto, it'll go up in spite of the dollar, but it'll go up doubly stronger against euros. So again, more reason to have some exposure to Bitcoin, and Bitcoin dominance might be strong. And I also, as I say, the platinum, the silver, and a little bit of gold do have many things. And also by yourself, Euro folk, what you can do in a proliferation time, if you were thinking of buying your idealized reset sniper home, go watch our Odyssey videos, by the way. I've told people where we're at and cycled around some of the benefits being around a community of people that are like-minded for the Great Resets, and having some folk to watch your back and watching theirs. There's a lot to that. So on Odyssey channel, you may have to pay a small amount in library tokens, decentralized videos hosted where you can say whatever you like, where you don't get banned, are really, really valuable. You guys need it. And yes, it helps to pay. It helps even if it's $1 or $2. And you're going, nah, I don't pay for anything. Well, then you will only see what YouTube decides you're worthy of seeing. And you will only hear what people can say inside the boundaries that they're allowed to say. And I'm skirting them very closely as it is. So if we were monetized, we would already be gone. So the key point is you get what you pay for, buy some freedom, and pay a little bit and support a channel, a platform that doesn't do it. So uranium is strong, and I wouldn't buy it here, but it could go higher, Cryptoversity. Are financials leveraged long oil and energies? It depends. The smart ones should be, if they've worked out the great game. I need to start overcharging myself for solar. Getting solar is going to be key. Everybody's electricity bills are going to be one of the highest climbing inflationary items. Your energy. Heating your house in winter. Electricity for heating water. Water takes an absolute ton. You should all make the lump sum investment, if you already own a home, of solarizing like it's going out of fashion. Please do. Communism was rough in Romania before '89. That's why I think Eastern Europe might get away with a little bit more, because they've already had it. It's going to be hard on the Westerners who've never lived it. Yeah, the digital euro, Lagarde. Yeah, I do think the central banking digital tokens could emerge as a result of this dollar strength. So it will be like the last straw. They'll use it. You see why we've got to have these digital currencies? You see what this strong dollar has done to us? It's made it inflationary for us. Oil prices are up. No, it won't be the strong dollar. It will be the proliferation of all fiats, the pump and dump scheme that the central banking cartel have perpetuated, the supply chain squeezes, all their monkeying around in the Suez Canal, everything that they've done that is all designed to hollow out the middle. You're being squeezed from the bottom, that's your personal expenses, and you're being capped at the top. And the currency that you're being measured in this tiny little space left that you're living in, is being deflated away on an annual basis, and you're finding you need a snorkel to breathe. And that's what they did to you. And they did most of it. And I have empathy for you, because you're in a shell game where you are the mark. But you've also got to take some responsibility, recognize that, build the assets that will appreciate, build exposure broadly, and get off grid as much as possible so that you do not rely on utility providers. You do not rely to the same degree as you do currently. And that's their great game. What else is going on here? The boiled lobster. Trump might be sane and able to talk. Someone talking about Trump. Introduction of a digital euro would massively increase supply, leading to a crash. Could do. Could do. They could cheat. No, my support people are typing replies, by the way, under the Market Sniper name. I participate as team, Market Sniper team, if I type, and I don't type while we are streaming. So it's one of our support people. So if you see the Market Sniper, it is my support person helping answering your questions. So let's just see any other questions. Someone likes a shirt, I think. Is it all planned? Large parts of it seem coincidentally coordinated. How did we all become lepers in a leper colony? Yeah, these sniper glasses filter out the BS. Yeah, good. Guys, thanks for your chats and comments. Book a link below. It's time to get organized. Book a call on the link below. Let me speak real English. Book a call on the link below. That will take you to our website and open up a diary. Discuss getting wise, getting people who watch your back, trading this great opportunities which will be coming. If you are independent and you've had a call and you think, I can't quite do it yet, good luck. Watch the trades on the smaller time frames. Stay in touch. We will continue to do fairly regular free views. I will be going out riding, and I might even post a few vids from the back of the bike in the lovely mountains with thoughts on news headlines. Some might come out on Market Sniper, some might come out in crypto. There definitely will be plenty on the Reset Sniper on the Odyssey only channel, which you have to find under the Market Sniper. So every FX, certain equities. So say you have in Africa, they sell gold in, if you have a company that is earning full benefit. So there are other ways to play this trend. Let me warn you of the currency hedges. Also, if you are in any countries that are the wrong side of the hedge and all the income is earned in euros, unless they hedge very well, and very few of these treasuries really trade the forex markets particularly well. They're usually on the wrong side of everything. I would say they will also lose ground. So if you're earning euros and your costs are in dollars, then you're going to be on the wrong side of that equation. But look at the equities that are the other way around. Those will do pretty well. Okay, thank you for watching. Thank you for checking in. Thanks for likes and shares. We will catch you again. We will do another serialization of the next one. I think that will probably be the USD Japanese yen. The yen will be week 2, and there'll be opportunities on equities there as well. For companies that sell into Japan, most of them sell into America, don't they? So they might have to get hedging too. So we'll do that one next as a serialization of the Great 6 FX trades as part of the dollar weakness, which also includes the Euro Swiss franc, which is also comparing the Eurozone specifically to a small but very well run country, relatively well, at least to the Eurozone. Thank you for watching. Thank you for sharing. We catch you later. Bye-bye.